It's the 70s, or perhaps the 2000s, when the Federal Reserve embarks on a perilous and risky journey which could determine the future of the global economy. Compelled to turn to unconventional monetary policies, the Fed has appeared hesitant to take them ever again. However, the events of 2020 have seemingly pushed the world's financial system and economic state to the brink as the novel coronavirus pandemic spread across the globe. In this desperate time, the Fed once again had to step up and take extreme measures to prevent a full-scale financial collapse from occurring. But now, as inflation worries rise, the Fed is looking to regularize interest rates and avoid a return to unconventional monetary policies. Yet, the complexities brought on by the situation have left many wondering what the Fed's true motivations are. I believe the anthem of the Federal Reserve is Fleetwood Mac's 1977 release, Never Going Back Again, a song which could aptly represent the Fed's desire not to revisit another period of its history. And while inflation is one reason why the Fed wishes to raise rates, there may be a second and hidden motivation which explains why the Fed is so committed to its higher-for-longer approach. It has been recorded in history that the Federal Reserve has utilized unconventional monetary policies to avoid two crises of enormous proportions in recent years. In 1987, the stock market crash was successfully shut down through lower interest rates and cash infusions. Likewise, in 1998, when long-term capital collapsed, the Fed swiftly came to the rescue. On a more devastating scale, the great financial crisis of 2008-09 and coronavirus pandemic of 2020 affected the entire world, significantly damaging the global economy and causing normal economies to suffer. Both instances forced the Federal Reserve to drop interest rates to zero, and the Fed is understandably reluctant to return to those extreme measures. The ultimate lesson of history is that the Federal Reserve desires to never again experience the momentary pain of using unconventional monetary policies to avoid global catastrophes. For that reason, the Fed is looking to raise interest rates to more historically normal levels in order to create a buffer against calamity, as well as to prevent potential deflationary death spirals. With the global economy on the mend after a long period of hardships and suffering, the Federal Reserve has evoked the wisdom of Fleetwood Mac, been down one time, been down two times, I'm never going back again. It is clear that the Fed is determined to never make a return to their past. But by continuing to raise interest rates and make the necessary adjustments, the Fed will ensure that the 1970s never come back to haunt us, and neither will the volatile and dangerous unprecedented policies of the more recent era.